Marriott holds its investor and security analyst conference today, where it will go through its growth plans over the next 3 years, which include adding nearly 300,000 new rooms, increasing fee revenue by $400 million, at least initially, while increasing revenue per available room. Welcome now, Arne Sorensen, Marriott International CEO. Welcome, Arne. Great to have you back.
Yeah.
So I just outlined sort of what I took away from your announcement. So how robust are these plans? How aggressive is this on your part?
Well, it's not robust. It's not aggressive or not aggressive, really, in some sense. About 20 years ago, we started doing these analyst conferences, and we bring in buy-side and sell-side analysts and say, we want to look at the horizon and basically say, how does the company perform over a longer-term period of time? Let's put last quarter's results behind us. Today we'll be talking about 2021. Mm-hmm. We're actually using a fairly benign projection about the economy, so same-store sales growth of +1 to 3, which is okay, but nothing particularly exciting. But layering on top of that, the new hotels we expect to open, 1,700 hotels, and saying, here's how we perform in 2021.
Well, if you're adding that many rooms, even if you are increasing revenue modestly, but increasing it, is that taking market share, or is that overall expansion of the market? Or is there going to be that much of an increase in demand for rooms?
Oh yeah, we are certainly taking market share. We look at market share in the U.S., where it's bigger for us today than in the rest of the world. Current market share, and then look at the percentage of hotels under construction that we have. And we have about twice the share in hotels under construction as we do existing. So we know we'll continue to take share in the years ahead, which is great. So today we'll talk about 275,000 to 295,000 new rooms opening between 19 and 21.
You were in the news over the weekend with the Wall Street Journal. There's an activist now who's taken a small position in your company. He says, you know what, I think they need to focus more. They've got too many brands, they're too spread out. Does he have a point?
We don't think so. Now, we're always all ears. We love to hear what investors think we should be doing and are happy to take in suggestions as they come in. This one runs contrary to what our strategy has been and what we've articulated, which is to say, for us to compete with our loyalty program, with our .com sites, against digital disruptors and others, we need to offer a breadth of choice to our consumers. Marriott Bonvoy, our new loyalty program name, we want it to encompass as much choice geographically, by brand segment, by sort of sensibility, by price point, so that whenever you're traveling, you can say, listen, I go to Marriott's site and I know I can find a place to stay. And so having more brands and more choice is very much to our advantage.
So that's interesting, because watching my Michigan lose to Michigan State yesterday, I saw Bonvoy ads, very compelling ads. And at first I didn't know what they were. I sort of paused for a moment. Will people understand that Bonvoy is Marriott, is Starwood?
Well, it is Marriott Bonvoy. Yeah. Those words will go together. And of course, it's a new word, so it'll take a while for folks to adopt. But we had Marriott Rewards, we had Ritz-Carlton Rewards, and we had SBG. All very loved programs by their members. We had to come up with a name to unify them so that the sort of ease of a single program could be delivered to our customers. And so we're working that way through Bonvoy. It's sort of an homage to Bon Voyage. I think it works pretty well. It shouldn't be too hard to remember.
So I remember when you came in and you just bought Starwood. One of the big advantages was their loyalty program, was their points program and things like that. After that, you sort of got in a little trouble with the data. Ended up in front of Congress, actually.
Yeah.
As you look back on that, did you learn much from that experience? I mean, as you get bigger and bigger and you integrate all these things, you become more vulnerable in some senses to hackers coming in, getting access to a lot of our data. Yeah,
that's right. I mean, we're constantly learning. We announced this cyber attack in late November of 2018. It turns out that bad players had been in Starwood's reservation system for a few years. And so we've learned some technical things about, okay, what could we have done with the benefit of hindsight the moment we closed to maybe find these bad actors earlier. But ultimately what we discovered was, okay, some data was taken from us. It turns out to be a bit less than what we first announced in November, but still something that we've got to take responsibility for and fix.
When we talk to big banks, for example, they're investing an awful lot right now in protecting data. Are you finding that an increasing cost for Marriott? Because as you get more and more sophisticated with big data, you got to invest a lot.
Every year, even before this cyber attack, we've been spending more than the year before. This is obviously a place that there is real risk in the world, and we've got to do what we can in order to protect it. We'll be spending more this year than we spent last year, and I'm sure we'll spend more in 2020 than we spent in 2019.
There were reports that, in fact, that hack may have come from China, ultimately. Are you having any difficulties in China? How much of your expansion, in terms of your rooms, is in China? And does it come crosswise of some of the data protection issues?
Yeah. So just to be clear, we have no idea where the cyber attack originated from. We have, of course, cooperated with the FBI. There are experts who love to look at these things from a distance sometime and opine about what they think. We don't really know. We have been we have disclosed this to government authorities, of course, when we learned about it, in the United States, in Europe, in China, probably 30 or 40 countries around the world where we went quickly because of their local requirements. And generally, the response has been pretty constructive. There are no particular issues in China for us.